Market conditions majority bullish at 14-0 on the daily, 14-0 on the weekly for S&P 500 futures. This morning we're seeing down just slightly, a fraction of a percent right here, and having a really strong week and month, continuing that overall uptrend, continuing to push that upper range here as well, and seeing some potential for that 6,000 range for some supply, running into some potential resistance here. We've got a pretty solid uptrend now in place. Any retracements within this overall compressed uptrend would be looked for as buying opportunity, pullback into any of these demand locations, this 5,800 all the way down to 5,600. We could even take this trend now. We've broken out of this most recent high, so we have a new structure location. We can actually connect this location here, and that's going to give us this perspective, a little bit different perspective, but now more of a bullish perspective where we're looking for these areas of demand to hold on any type of pullback. We've just got the one big overhead supply location. Everything else is bullish and opportunities here. So if we do get a retracement, watch in these around this 5,900 to 5,700 location, and those could be areas to be watching for accumulation. The only real big risk that we've still got is the direction, the magnitude of the trend here. We're back into that location. We're a long ways away from the average, and we've had just a huge amount of volatility here in the last few weeks and months. One of the other bearish things to be aware of is that we've got, the question is, in the expansion of this trend, are we sitting right here similar to where we were a couple of years ago with a deep retracement or rally back up and then some potential continuation of that overall downtrend? Or did we get it all done in a month and the counter trend is over and now we're reversing and heading back higher? Obviously, time will tell and we'll take it as it comes, but being aware that we do have overhead supply at this location and then we've got some bullishness. We're approaching the end of May now, typically a quieter time frame throughout the summer with kind of a bearish tone here as well. We'll see if that plays out as well. Let's take a look at SP closed out yesterday, majority bullish 14-0, and I'm going to push this back just a little bit more here as well. And that 6,000 range is in sight. That is going to be an interesting location. If we could blast right through that, or if we're going to run into resistance and pull back and kind of have some volatility now for a little while, that could also be the case. We've also got the market breadth sitting, pushing that 80 range on that weekly time frame. You can see that 80 range it's an unsustainable location. So when we get up to these upper ranges, we can retrace. We can also kind of slog around here for a little bit. That may also be in the cards at these levels until we get a little bit more clarity. Now the market may be looking out at recession, maybe looking at tariffs a little bit more closely again, and economic numbers, profits, earnings, those type of things. Markets may be focusing on those versus what's happening with tariffs, although that's changing every day. It feels like we're seeing VIX pull back to 18, so less than 20, still a little bit of a bullish feel on VIX. Bonds continuing to move lower, and if we just zoom out just a little bit on that time frame, pulling back, majority bearish on the daily time frame for SHY, the short end of that yield curve, and still majority bullish on the daily time frame. And you can see that trend kind of compressing, squeezing. See if it starts to move back higher or continues that move higher. That's ideally, rates would be moving lower in that case, but we're kind of seeing the opposite. We're still seeing this trend moving down, which means that rates are moving higher, and that's not necessarily what we want to see for economic expansion. Is more friction with higher yield prices. The longer end of the yield curve, TLT, really hasn't even budged into a potential bullish uptrend. A little bit of hiccups along the way, but still sliding. That's probably the biggest concern that the markets will, should be digesting, and probably will be. How that's going to play out is the bigger question. What the bond yields are going to mean for companies and the economy. Nonetheless, they are elevated here at this 5.5 range on TLT and still have an overall bullish uptrend. Let's take a look at DIA. Has yet to push up into this supply location, that 440 range, and so there's some area here, 427 to 440 of possible void to see maybe a push higher on the Dow as well. We're at an area where we could really go either way, but probably not super bullish or super bearish one way or the other. Could run into some resistance, run into some demand down here as well inside of this area. We'll see how that unfolds for us over the next few days and weeks. Triple Qs up into this supply block, and also that's going to be the area to be watching for. We do have compression. We do have trend shifting. So any pullback still is going to be bullish, watching for a contraction, a pullback, and then overall more upside. That would be the anticipation. And obviously until it's not, it's a bullish trend until it's not, or a bearish trend until it's not. Let's take a look to see where our 236 is sitting for triple Qs. That's going to put us back at that 494 range. So if we do get a retracement, 494 is going to be a significant area of support for the triple Qs. And let's jump over and look at the Russell 2000. That one has been, we're back to majority bullish right here, 236 at 201. That one's got a little bit bigger downtrend here. Let's see, I think we're right around that 50% retracement on the downtrend. It's going to grab this high and this low. So we're stalling right here at this 50% range. Some bearishness. That's the Russell 2000. That's your small cap names. Those are still your real aggressive risk on trades that they participated in this rally, but not quite as much. They had already been pretty oversold. And so we're back into at least 50% retracement, a couple of bullish demand zones underneath that. USO still trying to work its way back higher as well. We talked about that playground location yesterday of 66 and 69 for a possible bullish move, retracing back to 66, resistance here at 69. See if that pulls back, and if this becomes our range. We're majority bearish still in oil, and both on the daily time frame and the weekly time frame, but we're deep enough. We're at a 618 retracement location and tons of support at this area where it's trying, it's working. We'll see if we can push up one more rung on that fib scale. Let's jump over and look at gold. Also, gold up, back up just a little bit here as well, holding in that 236 area, and just an aggressive bullish trend right here. Pausing just a little bit, a little softness. That's good. That's what we want to see. Is we want to see some of this up pullback opportunity for more upside, buying into the demand at these locations. But it slipped. It slipped underneath that 236 location here. So there could be a range. We could see 286 on gold if that trend continues to retrace and slide lower. If it does, be watching for that 278 range here as well on that weekly time frame. That's going to put us right back here. That's a 50% retracement essentially of this trend, and that could be a kind of a natural support area for gold as well for it to hold up. Silver, similar price pattern, not quite as bullish, sitting at the 236. That could be also at the 618. Let me keep that trend locked in right here. And we've got still majority bullish on silver also. Dollar softening here a little bit, but working on that overall uptrend, or attempting a shot at trying to get bullish again. Let's take a look at a couple stock ideas for today. We've got Dollar General, DG, a nice confirmation bar back in momentum, increased volume. Also have AMLX into momentum, increased volume there as well. That's our overall pattern setup. If you'd like to learn more about the trading methodology, there's links in the description that you can get access to additional trade ideas, additional trainings, and learn a little bit more about this methodology. That'll do it for today's update. Everyone have a fantastic day today.